So after years of nonstop price growth, Calgary real estate, well, it didn't crash in 2025, but it did definitely change. And if you're an investor, this shift is something that you need to understand. So let's start with that big picture. Well, in 2025, Calgary recorded almost 23,000 residential sales. That's down 16% year over year. But here is the key point. That number is still completely in line with long term averages that we've seen in the city. This was not a demand collapse, but the real story was on the supply side because there were more than 40,000 new listings that hit the market in 2025, about 9% more than last year, and one of the records ever for Calgary. Inventory rose across every housing type at the same time that migration was slowing and economic uncertainty was dragging on through the spring. That combination took urgency out of the Calgary market and gave buyers time to think. And when buyers get time, markets normalize. Things slow down and prices, well, they tend to soften and to go down. There's also a fundamental market shift happening. One market is really becoming four. And this is where a lot of people are getting confused because the headline number talks about the benchmark residential price. And in 2025, it fell nearly 5% to about 555,000. But that single number doesn't tell you what's really underneath because the price changes in 2025, well, those depended heavily on the property type that you're looking at. Detached houses were down about 2.8%, semi-detached down about 1.6%, townhomes, those were down about 5.8%, and apartment condos, well, those were down nearly 9%. Calgary is no longer one uniform market. Returns are now dictated by supply pipelines, local inventory, and competition from new construction, especially in the condo and townhome spaces. So looking ahead to 2026, well, 2025, it was a clear transition market for Calgary's real estate. The extreme sellers market that we saw in 2023 and into 2024, unfortunately, that is officially over. And what replaced it is something much more familiar to Calgary, a balanced, segmented market where results now depend on what you buy, where you buy, and the price. So the key takeaway for investors, well, this is not a market to fear, but it is a market that rewards patience, selectivity, and you have to have a long-term mindset. We're already seeing desperate sellers creating buy opportunities right now that simply will not exist in another 12 months. So if you understand that prices are not going to stay depressed forever, and you're willing to ride out this current low in the cycle, this is exactly the time where smart capital moves in to make money. Trust me, there are absolutely no-brainer deals out there right now. Buyers, fire selling units, developers liquidating inventory, but you need to know where to look. Now, let's take a deeper dive into the December stats for each of those market segments I talked about. So we'll start by taking a look at the Calgary condo market. In December, there were just 272 sales. This is quite a bit lower than previous years and well below that spring market. Now, please note that this is not demand destruction. It is buyer hesitation. Buyers are out there sitting on their hands, waiting for clarity on where interest rates are going to land, international news headlines, and direction from the market. Now, moving to new listings, well, those fell sharply in December after peaking in the middle of the year. This means that sellers are pulling back. Many would-be sellers are choosing to wait rather than to chase the market down, especially those that are not under financial pressure. When listings drop but inventory remains elevated, it signals that the motivated sellers are already in the market, and those listings, they're standing out clearly. Sales to new listings, that improved in December to about 77%, but still well below the levels that we saw from previous years. The market is still buyer favored, but the pace of deterioration has slowed significantly. And this often marks the late stage of a correction phase that I think that we're in now. Active inventory, that declined significantly down to about 1,200 units into the year end after reaching multi-year highs in 2025, but still well above previous years that you can see here. Inventory is still elevated. but the peak is likely behind us now. Absorption has started, even if it has been slow. There will be significant inventory still coming to the market in 2026, but I expect the worst to now be over. Turning to months of supply, well, it ended December at about 4.6 months. This is above seller market levels, but really below panic territory. I want to see this number continuing to come down. And really, this is the statistic to watch, as tight supply will generate increased buyer activity. Because think about it, when people are out there and they miss out in a multiple offer situation, they're going to become much more motivated. And that psychology of the market can change very, very quickly. Days on the market, that climbed into the high 50s, and this is amongst the highest that we've seen in recent years. Units are taking longer to sell, which pressures impatient sellers and exposes those overpriced listings. The people waiting for 2024 prices, you're not going to get those now, and you're going to trail the market down. So what you need to do is you need to be aggressive on your price if you're looking to sell a property. If you're looking to buy one, then you want to target those units that have a significant amount of time on market because you know they're not going to sell. There is going to be negotiation room in those prices for the units that have been on the market for over 3 months. But this is the chart everyone cares about. Benchmark prices, well, is continued to drift lower, ending December near 304,000 after peaking in the middle of 2024 closer to 350,000. And that is a pretty big adjustment, but this is a controlled price adjustment. It's not a free fall. You know, they say normally that prices in the stock market, well, they take the stairs up, but the elevator down. This is not one of those situations. These are taking the stairs down, and prices are reverting back toward more fundamentals after rapid post-pandemic price gains that we saw. Even at a $304,000 increase, that's well above the $250,000 that we saw at the beginning of 2021. So where do I expect prices to go from here? Well, I think they're going to stabilize through 2026 because right now I'm seeing units sell at ridiculously low prices as some investors panic or they're forced to sell, and as developers liquidate units that buyers have defaulted on and significantly discounting those prices because they get to keep the original buyers' deposits as well. These prices currently, some of them that I'm seeing are well below fundamentals, and there will be a reversion back up to the mean. So I think we're going to see slight price decreases into 2026, but I think things are going to significantly stabilize through the next 6 to 12 months. And now turning to townhomes. Well, the townhome market is often the canary in the coal mine for the wider Calgary market, because it's more affordable than detached homes, but offering more space than condos. So it's a nice blend of the two. The December numbers showed a sector that was clearly pumping the brakes, things slowing down. It's offering a distinct window of opportunity for investors and buyers who've been priced out for the last couple of years. The sales, well, those hit the lowest point of 2025, dropping 50% from the spring peak. This is a sharper decline than we typically see even for December. And it's because, well, volume has dried up. This low transaction count means comparable sales data is going to be thinner in January now, making it harder for sellers to justify that peak pricing. Those ones still expecting 2024 prices. New listings, those fell off a cliff in December, dropping from the nearly 800 in the spring to just over 200 in December. This is a massive withdrawal of inventory, and this is going to help keep prices from sliding and from going down. Sellers simply aren't listing unless they have to right now. The sales to new listings ratio, that spiked up to nearly 84%, technically indicating, a seller's market. But ignore this signal. This is a classic holiday anomaly. This ratio is only high because new listings virtually disappeared. It does not reflect, a strong buyer demand. The falling prices are going to tell the story. And looking at inventory, it dipped seasonally to 643. It's still notably higher than the ultra tight levels that we saw back in 2023 and 2022. We're starting 2026 with roughly double the inventory that we had 2 years ago. And that scarcity mindset that buyers had is now gone. Turning to months of supply, that's continued to go up, but it has stabilized under just 4 months. And this is really the definition of a balanced market. This is the sweet spot for buyer negotiations, but sellers aren't desperate. They're not arrogant either, though. You can likely include a financing clause, inspection conditions without losing the deal immediately, and multiple offer situations are going to be much, much more rare. Days on market, well, properties are lingering. The average days on market has steadily climbed from a low of 27 in the spring to a high of now around 50 days. That 50-day average means that units are sitting, anywhere from 45 to 60, 90 days. So if you're a buyer, look for those listings that have been stale since October, because those sellers are your prime targets for below ask offers. And the proof is in the pudding. What's going on with the pricing? Well, the benchmark price has bled value for the last 6 months, down from a peak of about $547,000. That dropped about $36,000 in equity from the peak. The market is giving back some of those gains in the first half of 2025, but we're essentially back to late 2023 pricing levels. Again, you have not dropped off a cliff. This is not a price crash. This is a price adjustment based on huge run-ups in prices over the last couple of years and significant inventory coming to the market. Turning to the detached market, well, it's historically been the most aggressive and largest sector in the Calgary housing market. But the December charts confirm that, even this asset class is not immune to the cooling that happened in 2025. For investors, this is the breath that you've been waiting for. Prices have been retreating from their peaks, and the urgency that killed deals in the spring has completely evaporated. So looking at sales, well, they hit a bit of a wall, dropping to about 587 units. This is the lowest monthly volume that we've seen in quite a few years, but it is very consistent for Decembers of previous years. The only year that was really higher was 2021. New listings, just like the other sectors, sellers really pulled back hard for the winter. Listings dropped from over 1,000 in November to just 559 in December. This tells me that most of the panic selling or excess inventory from the fall has either been sold or the listings have been terminated. The sellers remaining on the market in January, those are the ones that likely need to sell. Sales to new listings ratio, that skyrocketed to over 100%, technically indicating that more homes are being sold than listed. Now, don't read too much into the sign of a heated detached market, because again, this percentage is artificially inflated because of the very low new listings. And inventory, it has dropped seasonally from the summer highs of about 3,100 units. We're ending the year with more product on the shelf than we had in December of 2023 or December of 2021, but much, much lower than what we saw in early 2025. Months of supply, it's tightened actually to 2.7 months, down from the high of 3.7 in the fall. Again, mostly due to sellers delisting for the holidays. At 2.7 months, this is balanced market territory. Compare this to the spring when we were well below 1 month of supply. That power dynamic, it has shifted more towards a balanced market. And days on market. Properties are now sitting for nearly 2 months on average. This is a stark contrast to the 25-day average that we saw in the spring. That was incredible. So if you have a detached home sitting now for more than 50 days, if you're a seller, then that's telling you that you have to reduce your price. And speaking of prices, the benchmark price has trended down consistently through 2025. It set a peak of about $770,000 in the middle of 2025 or middle of 2024 as well. You had two peaks here and here, and you're now sitting about $727,000. That's roughly a $40,000 correction from those peaks. But it is well above the averages that you saw back in 2021 of about $550,000. So there's still significant demand for the detached market, but as prices went up, affordability got stretched and new inventory came to the market, which has really stopped the price increases. So that is the December 2025 Calgary real estate market update. Stay informed, stay patient, and if you need help selling a property, or if you want to explore those no-brainer investment opportunities available right now, get in touch. This window will not stay open forever, and please, don't forget to give me a like if you enjoyed this video and subscribe for more real estate investing content. Bye for now.